Hello, Mark Sturdy here with 7 Days Ahead's highlights of our multi-asset technical strategies, week of the 2nd of November 2021. If we go to the summary page, not a great deal has changed since last week. We remain bears of the currencies, particularly the euro and the yen, against the dollar. We've pulled back on being bearish of sterling because we don't think in the short term there's a lot going on. We remain, we're now bullish of the S&P and the Eurostoxx 50. They've made important breakouts to the upside through previous all-time highs. We are bullish short term of the Ftse, but because of the surrounding context in the medium and long term, we're not that excited by it. We are very bullish and have been for a long time of the 225, but short term it's still in a very short term trading range. So these are the two, the S&P 500 and the Eurostoxx 50, which look exciting particularly in all time frames. We remain big bulls of the gilt yield, yields up, prices down. The others are close to exciting patterns being completed, but not quite there yet. And we're still bulls of oil. Let's just remind ourselves what's happening in the dollar euro. The euro strengthened and has now failed beneath 125, and the failure has taken the form of a complex head and shoulders reversal. One shoulder, head, shoulder. The market's now established itself beneath the neckline and has tried to rally through it and failed. So we're excited. Here's in particular the price action of last Friday shows the failure from the resistance at the neckline. So short, medium and long term, that is on the way down in euro terms and increasing strength on the dollar terms. Much the same with dollar yen. Here we have the dollar yen, the big long term chart, short, medium term chart and the short term chart. There's not quite a breakout there, but it's very close. That, if I'm not mistaken, is a bull falling wedge, and that's completed. In the stocks, we are bullish of Eurostoxx and S&P 500. New things have happened here. Let's quickly look at the detail. There's the big picture in the S&P. Here's the shorter term. This is the weekly chart breaking through prior highs, and the short-term chart breaking through the 45.38 level in the December future. Jumped through, came back, retested, and found the breakout level was good support and has pushed on. Short, medium and long-term bullish. Similarly, the Eurostoxx 50. The long-term chart's been bullish and underpinned for quite a while. These highs back in 2015, 2017, 2020, they all provided great support. The market's established itself above there. The question is, how is the market going to, it's been going sideways for some while. Now it's broken out in the weekly chart. We see that. Exciting. In short term, there's a good deal of very short-term support beneath the market from prior highs, recent prior highs, in August, September, 2 in September and 1 in August. So good positions, close levels of support. We're bullish of Eurostoxx. The Ftse, just to carry on from last week, has completed this bull triangle in the medium term, but because of all this price action up here, we find it difficult to get very excited. We might change that somewhat if we broke through this diagonal from these prior highs up here. So we are bullish short term, but we can't be as excited as we are for the S&P and Eurostoxx 50 because we're still struggling beneath prior highs. Our other great excitement is the gilt. Go back to that. Here's the long-term yield chart, and we have a beautiful bottom formation has formed here, more clearly seen in the weekly yield chart of a reversal, calling the market up to 1.8, which is still quite a way. There has been a pause and pullback to the neckline, which looks as if it's held. And price-wise, there was a double bottom, but it doesn't look as if that double bottom is going to drive the market further. The market failed to get back up through its downtrend in price terms. Resistance, that diagonal, and looks as if it's coming back down here. There's no appetite for lower yields in the gilts anytime soon. We remain big bulls of oil. The monthly continuation chart shows the drama of breaking up through this horizontal from prior lows that beat the market when it tried to rally up through that in 2018. It's now established itself last month above it. Big break, big important break. This is the weekly continuation chart, which we believe is a hidden. Sorry, this has been badly drawn. The shoulder, I beg your pardon, it's been badly drawn. The neckline should be drawn from there to there. Shoulder, head, shoulder. Sorry about that. So this neckline should be connected from there to there. Apologies. In any event, it has broken and completed and suggests much higher. That's exciting. And short term, the market has paused and over the last week rallied hard. We remain bullish, driven by weekly key reversals, monthly key reversals. It still looks very good. And that's it. Thanks very much.